Hi, everybody. Thanks for waiting. My name is Laura Mandaro. I'm the managing editor for News and Talent at The Information, and I also edit our venture capital coverage. And I'm very delighted to welcome our two VC reporters, Sri Muppidi and Natasha Mascarenhas, and one of our nominees for our second annual Next GPs, where our reporters talk to many founders, investors, VCs, limited partners about the venture investors and in some cases, the technology leaders who we think, because of their activity in sourcing deals or making investments, are in line to be general partners, which is obviously the most senior type of venture capitalist at many venture firms, with the most senior check writing ability and ability to make money off their investments. So this is a labor of love for these two reporters because they get to talk to a lot of people and there's a lot of feedback. And we think our readers find it very interesting, and we definitely learn a lot about what's going on in the industry. So we're really pleased to sort of take you behind the scenes as the event advertising indicated, talk about why we do this, what went into it, some of the themes, which also often reflect what's going on in the industry. And we are very happy to include Nick, who from B Capital, who was on the list this year. Nick, do you want to say a couple words about what you do at B Capital?
Yeah, thank you so much, Laura. So I'm Nick. I'm a senior principal at B Capital. I focus primarily on the infrastructure side around data, kind of cloud infra, security, and really all things in generative AI as well.
All right. Well, I know we're going to talk a lot about AI, but let's just sort of go to the basics. And I would say, while I'm going to lob questions at Shri and Natasha, please, for our attendees, definitely ask lots of questions, and we'll open it up, and I'll try to get to everything. So, um, uh, Shri and Natasha, maybe we'll start with Shri, since you kind of wrote the article that wrapped everything up. Could you take us through sort of what stood out among these individuals? Were they tended to be at their firms for a long time? Was there a particular type of deal that you saw over and over again? Were there particular companies that were sort of a badge of honor that helped people identify them as sort of ascending leaders?
Great, great question. And thank you everyone for being here. Really excited to dig in. So I think some of the trends that really stood out is that there were either investors who had been at the firm for a number of years and were able to either own verticals of investing areas, such as like security, like Casper Wang at Sapphire Ventures, or Elena Sakic at GV that has been leading fintech, or it's folks that do a unique component or strategy within their fund. So Didi Das, for example, built out or helped build out Menlo Ventures Anthology Fund, which is a $100 million fund to invest in collaboration with Anthropic, or it's skills that they bring to the team that no one else has expertise on. So one standout example is Yoko Lee, which Natasha can expand upon as well, who has really deep technical expertise that she brings to A16Z. But beyond the career investors, there are also folks that have operating skills that are now exploring VC. So one person that really stood out to us was Karen Peacock, who has previously been the Intercom CEO, was the SVP at Intuit, leading a $3 billion unit or business line. And now in her free time, she advises startups and invests as part of Operator Collective, as well as advising other growth equity shops with her expertise. But Natasha, if there are other trends that you picked up on as well, would love to pass it over to you.
Yeah, no, that was a perfect overview. I would say a big question we get every year we do this list is, rising leaders in VC can mean a lot of things to a lot of people. And while our definition is the person leading the firm, the topmost person, I think there's like some subtle ways you can track people who have that ambition. So in the case of Jamin Ball from Altimeter, he has a super prolific newsletter that is his way of staying top of mind and has actually brought LP and founder intros his way. And the reason Nick, who can speak to this more, came on our radar for this list was, of course, like having an interesting vertical at BCAP with generative AI, doing poolside perplexity, but also building internal tools for BCAP and himself when it comes to sourcing, which I think is a trend we are interested in and really see like a future group of investors caring a lot about. So we look for everything from like Shri said, skills to verticals to like, is this person building a reputation for themselves outside the day job?
Nick, maybe you can tell us a little bit more about what you've been writing, but what was the genesis of that? Is this something that you think is, every venture capitalist on the move needs to do, or this was a way of getting in front of future founders?
Yeah, so Laura, I appreciate the opportunity for the shameless plug of a white paper that I recently released with a co-authored with the head of AI for startups at Microsoft. And so the piece is called RAG, in the future of intelligent enterprise applications. And so basically the primer of it was, hey, last year everyone said 2024 was the year of production, right? Or it was the year of going from 2023, the year of demo, 24 was going to be production. And now I think 25 is, well, this is the year of agents. And then maybe it's going to be production and maybe it's going to be, eventually in 27, 28. And I think we have to balance simultaneously these demos that show incredible capabilities of models and kind of very well-defined workflows of operating. But anyone that's really tried to build an intelligent system, soup to nuts, has probably failed. I mean, it's kind of the why are we not seeing more live Gen AI applications from some of the world's largest enterprises that are customer facing, not just internal facing. And I think it really comes down to, what we found after interviewing a bunch of different founders that are spending all of their times trying to abstract away and solve these problems, three main areas, which is context, trust, and then production-driven development, so feedback loops. And so for the genesis of the paper was really trying to understand, hey, what can we learn from some of the best experts in the industry that are spending their entire careers trying to solve these problems? Can we codify them into best practices and then share that with buyers and builders to help them solve some of these issues here? And so we highlight in the piece 8 founders that are building specific chunks of the infrastructure to ultimately not just go from what was been previously, I'd say like a search engine to not even just an answer engine, but ultimately building action engines. So I think the future of what generative AI is going to look like is just, frankly, not just retrieving information, but going and taking all of that and then solving and achieving the outcome that is desired for whatever the use case might be.
Okay, cool. I mean, it sounds like, speaking about generative AI, I guess I was surprised that it wasn't, even more of a theme this year. And I wonder, Natasha, since you've done it and for 2 years, if you have any perspective on, how this huge wave of investment and excitement and kind of sort of explosion in knowledge that Nick is referencing to a degree, how that's informed the careers of these investors. And do you have to be doing it to be kind of on a leadership track?
Yeah, I mean, I would say like so many of my conversations with VCs these days are like half AI and sort of this crazy moment of getting your head around these back-to-back funding rounds, and the other half is the business of venture capital and how to survive as a VC. And Nick, I want to hear what you have to say to this because you've worked at so many different VC firms. But I think it's more important than ever to pick a lane. And the reason I believe AI did not come up as much on this year's list compared to last year, and maybe even going forward, it's probably twofold. It's one, what we've all heard, which is AI is everything now. And even Anduril has an AI component and storyline to it. And so I feel like some investors are actually standing out for having a strong opinion on something outside of LLMs, to be super specific. So Alexa from General Catalyst, for example, is one of our younger people on the list, joined GC in 2021 as an intern, but then returned and has quickly risen to do their global resilience, aka sort of defense and frontier tech strategy. And then we also have Sanya Oja from BCV, who's doing security, infrastructure, and also some fintech. I mean, they're all doing AI related deals, but I see a lot more people looking to like becoming associated with a certain sector if it's contrarian. And then if it's within AI, it's really like, can I get the trust of my firm to be like, the next Martin Casado, or am I, do I stand out for a different reason? So I feel like it's a mix of AI becoming everything and other sectors giving you a chance to like brand yourself more. But Nick, I mean, you're in the AI world. How do you think about like committing to that sector as a VC? And like, do you game it to sort of try and be a GP one day there, or you're not thinking of it that way?
So there are kind of two ways I want to break this down. There's like the gamesmanship of making it to GP and specialization versus being a generalist. And then two, it's like, what if AI is everything, is it actually specialization or not, right? So first on the gaming, the advice I've had, as you mentioned, the chance to work for a bunch of different mentors. My journey of breaking into venture, I'm happy to talk about that. But I truly believe it's an apprenticeship job, and I had a chance to learn from some of the best people, I think in the practice here. And so Tomasz Tungus is one of my great mentors. He basically said, hey, in your career, you have this wide, narrow, wide, where you start off wide, look at everything, see what you can extract, see what matches over between industries, verticals, use cases, whatever it might be, info or app layer. But then as you start doing deals, you start figuring out, hey, where am I sharpest? Where am I pointiest? You start having to build your brand, because each firm, as you're hiring, it's like, hey, it's a baseball team or whatever analogy you want to have, an orchestra. I need this person to cover this because I want to be sharp here. I want to make sure I'm looking at the best and brightest deals, whatever vertical it might be, fintech, AI, whatever. And so once you kind of assert yourself as a principal, now maybe junior partner, once you get this GP, I think it's like getting tenure track, right? You're at a university, it's harder to, GPs don't move around as much. Then you kind of have the freedom in the room to be a little bit more broad and say, okay, my focus is primarily this, but maybe I have a couple other areas that I could go deep into. In terms of, and one, happy to answer anything if you agree or disagree, not spicy take or too generic or not. But on the AI is everything side, I'd say, okay, yes, they're in the same way that data was supposed to be everything. Hey, we are going to have data-driven operations. Looking back one super cycle, I would still argue that, being able to look and understand so first of all, enterprises don't care about infrastructure. They don't care about whatever it is. They just want that outcome. But I think if you're not really deep into, okay, let's say we need to have the right context that's either going to be in a vector store or something that's in memory. If you're not able to go deep and kick the tires of what does episodic memory look like versus what's long-term and persistent storage, or what is the difference between embeddings that are static versus updated every time someone edits a document living, right? These are very specific questions that you have to have an opinion on to figure out what is BS or what's real. And so I'd say, yeah, AI is going to have, its foothold in everything. But I'm increasingly looking at application stuff, because I could go and say, when I have the questions of, are you a ChatGPT wrapper or not? I can get a very quick answer of, is this real? Have you built in the right feedback loops? Do you understand what trust looks like through reliability and transparency of like all the guardrails we've set up here? And I think that, in my mind, is a toolkit that allows you to, ask questions not just of within your specific vertical, but interrogate a broader section too.
Shreya or Natasha, did over the last year, we've written a lot about the demand for the technical VC from AI founders. You've both broken news on some of these hires. Does it still, I mean, kind of just reflecting on Nick's last like conversation, it seems like investors who have a technical background would still be very much prized because they can get in the weeds on that. Do you see that still going strong, even stronger than maybe it was before, or any change in that?
I definitely think so. I actually spoke to a recruiter a few months ago, and I recall them saying that the demand for technical skills is really peaking, and there seems to be always waves where people seek either career investors or ex-operators, but right now it seems like folks are really looking for technical skills, and I think that's in part to be able to diligence these types of investments, but also there's a lot of AI opportunity in like more technical fields like biotech or um, for example, like sciences or different types of like um, areas that you might need a PhD in. And so I think particularly for early stage firms, they are indexing for computer scientists or a medical student that is doing an MBA at GSB, for example. I think these are the profiles that really come to mind, particularly at the early stage level. But I think when you hit growth stage, that's more down to again like business and financial fundamentals. And I think like you don't necessarily need to have technical skills to be able to assess the future of a company if, for example, they're already hitting the product, like have product market fit and have the metrics that really point them to like, okay, this is a Series D company now looking to raise their Series A. Like you can just look at their P&L and get deep into that.
So I'm curious not to interrupt you, Laura, on this one, but given the dynamics of rounds, and I think particularly from the information advantage of seeing, very, very early intel on when rounds are happening, you do get sensitive revenue, but product market fit in this world it's really hard to say you found it if you're raising 6 months after the previous round. Maybe there's been a slight uptick in revenue. And I know some companies are getting extremely fast ramps up. But if you haven't found product market fit, and this is now still a bet on the future outcome you're trying to achieve here, it's not like the growth rounds, it's really still in my mind early stage risk. So it's hard to say that the tech isn't as important at growth, I would say, in given the current meta of the market.
Yeah, so I definitely think so too. Like I agree with you in that sense, especially since it seems like traditional growth, like Series B to D, are now playing in like Series A land. I think maybe like historically, I would have indexed on like early stage VCs seeking more technical skills. But I'm curious then, do you see more of your growth firm peers like hiring more folks with technical skills, or like how are you thinking about these deals when you are evaluating? Because for example, we like broke news on like StackBlitz, for example, seeing really fast revenue growth, but they are still from a team perspective quite early and quite young from a company growth as well. So I'm curious like how you assess that.
Yeah, it's interesting. So one thing, I mean, even for my journey at B Capital, I was originally hired to the growth team, and now we've shifted around a little bit. So my immediate the GP I work under, Yonder Ehrlich and I, we're a bit more domain specific, but multi-stage. And so we're now doing deals that are seed all the way up to a Series D that we did recently. And so I would say, the technical for us is, all right, maybe when it comes to growth and scaling, there's going to be a different type of analysis that we have to look at here. But from the does this have a right to exist, or what is it doing is differentiated, and how fast is it moving relative to the advances in the field? I think that's a very valuable skill set to have regardless of the stage you're looking at.
Do you think then like you're assessing the tech itself, or for example, doing like customer reference calls or like GLG calls to kind of assess like the commercial traction? Because I think like that's where I'm kind of curious about like where technical skills really matters. Like
Yeah.
whether it's like pre-seed and seed and you're trying to assess like PhD students research and then like whether or not they can monetize off of that, where I think you really need to be able to understand like the architecture of a chip, for example, if they're building new types of companies around that versus like if it's a stack blitz that has like revenue and the app makes sense overall. I'm curious how you dig into that. And Laura, Natasha, feel free to interrupt as well.
It's okay. I
Yeah.
want to hear the answer.
No. I think it is funny because I think like as you think about the core skills of a VC, I think it's like, all right, one, there's a sales component, right? You have to be like selling yourself to the founder, selling the founder to the IC and whatnot. Two, I think it is like an investigative journalism side, like being able to do deep research, from a qual and quant perspective. And then three, I think there is, a little bit of the deal execution side of that too. And I actually have one more four, which is portfolio support, right? On the investigative journalism side, the type of questions you're going to ask, right, during a GLG call with a highly, technical user, it's not just the buyer, right? If you're talking to the buyer, it's going to be things about, do I have SOC 2 compliance, and can I run it on-prem? Can I, these are the type of questions that are a little bit more generic, but a more, technically deep conversations like, all right, hey, when I'm using StackBlitz, for example, am I able to quickly edit the code inline, or do I have to, what's my CI/CD pipeline look like with this? And it's like, oh, well, actually, you have to go back to StackBlitz and then push those to your GitHub, right? That's something that maybe you wouldn't pick up. Lovable does it differently, or maybe Cursor, allows you to do this directly in your repo. These are questions that might have one level more kind of sophistication if you understand that workflow, as opposed to someone that is, hey, numbers go up, I'm excited. This looks like growth. I want in. Now I'm going to try to diligence this, right? It's a little bit of a different conversation.
It actually touches on something that I have really had in the back of my head during this reporting process, which I think we did a good job on the first list, but probably even a better job this year, which is not using markups as the sole way to think about who a next GP candidate could be. Part of the reason was because everyone, if you've invested in AI, you probably are sitting on a markup. Maybe that's too bold of a claim right now, but I actually think that like there's a lot of markups are going all around right now. And so, yeah, just thinking about ways to like understand who is winning and standing out right now beyond like the fact that they made a pre-seed investment that in 6 months got marked up 10x, I think is something we want to be careful of because the correction, and this maybe brings us into this week's mood a little bit, is always imminent. And so I feel like just thinking a lot about that too, when it comes to strong investors.
Well, I want to talk about sort of the state of venture capital because I think, the premise of this list that there are these people are, are likely to be the next general partners assumes that there's, growth within the industry, that there's mobility. And while there have been many big funds, we're still sort of in a retreat from the peak in terms of VC fundraising from 2021, 22. And we still continue. I mean, Natasha, you broke some news about layoffs, which are still generally rare in VC happening over the weekend or last week rather at Craft Ventures on the, I think they call it the platform side of the business.
Yeah.
So, I mean, is this, maybe you could sort of sum up where we stand with venture firms growing, where, is it a lot harder than it was a couple of years ago? Did people talk optimistically, pessimistically about mobility, leaving the industry for banking or
Yeah.
something like that?
In some ways, I feel like we're going to see the GP job title continue to grow, but in different ways. Maybe they're not going to be a GP at Sequoia, but they're going to be a GP of their own firm or a firm that they are doing with other top tier talent. So last year we broke news on Chemistry launching, which was a trio of GPs from Bessemer, Index, and Andreessen Horowitz, leaving their respective firms and starting their own fund. And so I feel like, that doesn't maybe answer the question of like, are institutionalized firms going to open up new GP bets? Who knows? I mean, some GPs are stepping back, like the Brian Singermans, or the Jeff Fleurs of the world. But I do think, like more than ever, I'm hearing from people within firms looking to get that GP title by leaving and starting their own
Why
firm.
do you think that is? What is?
I think there's less opportunity probably to, to get to that level. In the case of Altimeter, for example, they probably wouldn't put it as less opportunity, but Brad Gerstner runs the firm. He's the sole owner. And so I think like that model is nothing new. I just think that in order to then be, I mean, maybe you don't need to be the GP and that's just not the title you're looking for. And you still have significant carry. You still are a GP in every way except being a firm owner. And so I think a little bit of it is people are going to decide if they want that title. And if they do, they may have to leave because their existing firms are not opening space for that. That's one like theory I have. I mean, Nick, you're seeing a lot of your friends, and I'm sure you're thinking about this too, which is like, is there going to be a room for me in GP or in the GP role? Um, what kind of decisions are they thinking? Like, is it as existential as we see it, which is there's not that many opportunities that are opening up and it's only getting harder?
Yeah, I mean, I think you always have to ask yourself, like, what is the evidence that you've seen at your firm of people promoting up from, associate all the way up to the general partner, right? I think there's some funds that are, very upfront about this. I think like First Round Capital, for example, they have this pipeline of working as a as a chief of staff, and then you do it for a couple of years. You learn the apprenticeship of venture. You go off and do something else, and maybe they'll take you back, right? At my firm, when I was hired, I asked them this directly, like, hey, is this something that you see as a GP, pathway? And I will keep on pushing them to make sure that that's a possibility for me here, because I would
Yeah.
love to continue doubling down on my current shop. But I do think, frankly, it's a market where the IPO windows, the exit windows are getting pushed out. People, are not sitting on a ton of DPI, depending on the stage they're investing in. And so I think, I can, go and rest on my laurels and retire. Maybe people are taking a couple of years to do that. And so maybe that it is feeling a little bit more top heavy at certain funds. Again, I can't speak to the dynamics at every other fund and what that's like, but maybe that could be an explanation for that. But I do see, hey, in the same way that I forget which VC said that we're going to see a single person $1 billion company come out, fully agent driven. I think you can get a lot done, particularly with some of the services that are now being offered for like AI, diligence tools or fund admin tools. It's getting easier and easier to start and launch your own venture fund. And so, then the main problem becomes, can you raise, right? So if I have all the admin covered, can I source? That's going to be largely driven by how much you can do outbound or what you're getting inbound. And then do I have people that are going to back me? And I think you're seeing some incredibly talented stars at their funds build relationship with LPs, and then see there's an opportunity to go and start something on their own.
Mm. Natasha, could we talk a little bit about the folks on the list? I think there were four, I believe, operators, people who are not currently venture investors, but they may be angel investors. And it'd be good to put some of that in context with what we've been writing about over the last year.
Yeah.
I think you've broken some news on folks coming from OpenAI and other places.
Yeah, definitely. Yeah, no, I wrote a story this fall about why AI founders are starting their own venture funds, and it very much connects to the topic we've been discussing around what founders are valuing in a moment where technical skills, diligence, from early to late stage. And so in that piece, I wrote a little bit about how, the CFOs, COOs, co-founders, of these AI companies are leaving and doing full-time funds, taking advantage of the community that they built, being, the CFO of Pilot, or the former head of operations at OpenAI. It was sort of a response to something we saw a few firms do in the beginning of the AI boom, most recent AI boom at least, which is Spark Capital hired someone from OpenAI. Recently, Felicis hired a strong operator from OpenAI. So it's, I think, a continued trend that's being proven out truer every single day. And so for this list, we always like to highlight a mix of operators as well to make sure we're ahead of anyone choosing to take advantage of a network that they are almost passively building because their day job is so entrenched in startup land. And so one person that, came to mind immediately when we started putting the list together, and then also was supported with other founders and investors telling me to pay attention, was Lulu Cheng Maservi, who is very famous for being a PR professional that is outspoken on X and other platforms about going direct to founders and sort of navigating many crises herself, whether it was Substack or Activision. And the reason she made the list was actually that she's full-time PR. She started her own VC firm, but she's also in that first year taken equity in a lot of her high-profile clients. And that's everyone from Anduril to Safe Superintelligence, SSI, and Ramp. And so I think it doesn't take too much of a jump to get from Lulu Maservi as someone who has equity in these companies as part of those deals to Lulu Maservi has investment opportunities that LPs may be excited in. So I really see her being someone that we could see taking that jump into VC. Maybe it's in the form of whatever a 2025 version of a rolling fund is. And then the other sort of operators, I can toss to you, Shri, because you really took lead on sort of gathering some other names of people that were coming up.
Yeah, so one person that came up was Dimitri from Perplexity. He was the chief business officer at the company, but also takes a lead role in leading all external things for the company. This includes even the TikTok deal and the bid that Perplexity had put together. And so that stood out as a component of like what might look like if you were doing portfolio support for one of your companies. And then also given that he had previously co-founded a company and advises companies in his free time, are examples of sort of like pointing to that trend. And then I mentioned Karen earlier as well, but she was the former CEO of Intercom, and then in her free time advises companies. She's a LP in an early stage fund called Operator Collective, and also does growth equity advice to a shop called Primera. And so I think that really points to, again, like interest and ability to move into the venture land if, for example, that person chooses to do so.
How important is it for these? I mean, a couple of years ago, there was a lot of ink spilled about venture capital influencers and the sort of like the Twitter sphere and blogs, and even some have TikTok channels. Like, how is this still a big deal where you find that people are standing out in part because they have created some brand?
I think that would probably be less important, whether it's just due to like X and TikTok maybe being like having existential crisis of their own. And so I think there's like less um, focus, I think, versus maybe from 2020 to 2022 when everyone was spending time online and during COVID. But I think where people can really still continue to stand out while building brand is around like content, whether that's like through Substack blogs like Jamin with his 70K subscriber blog, or content that is maybe like pushed and heralded by the firm itself. So Bessemer Venture Partners, for example, has really great roadmaps and benchmarks that Talia, as well as Mary, who are also on the list, have really been a key component of. And so I think there are ways to build brand now outside of just the social media platforms, but now doing it like where it's self sort of hosted, where you have sort of that direct relationship to your readers via Substack, or maybe when you have a bigger reach through the firm itself. But Nick, if you have ideas or thoughts on that question as well, just given you're in the space.
No, I mean, I think brand is wildly important, right? Particularly as you're having, your inbound, but I think it's who are you resonating with, right? And I think if I had to think about like the most important, obviously readership and audience that want would be founders. I think, the second most would be buyers and builders, because, if I'm able to say, hey, and with this white paper, listen, I'm banging my head against the wall. I can't solve this problem. I'm at my wit's end. I really want to make Gen AI work. Okay, if Nick or Microsoft can point you towards 8 founders that could solve this for me, then you become you become the source, right? You become the source of trust. And so if I could then go to a founder and say, hey, I've got a readership of this had X many impressions here, I would love to do another piece with you and then highlight you, and I can get you in front of this audience, and that leads to lead gens for them. I mean, that's super valuable, right? And so I think you know Twitter and Blue Sky or whatever that social media platform allows you kind of, cheap, very fast. I mean, it's the repetition. It's you're able to get that to, high velocity. Maybe that's valuable for some, people, and then others can go maybe a little bit longer form or more, episodic or something that allows them to get, their own. I mean, the most important thing is having brand that feels authentic and is actually valuable to what your end objective would be.
Um, I got a couple more questions. One is like, how did we do in terms of, I mean, maybe 1 year is not long enough to pick a GP winner. And we did do a look back piece. Our reporter Akash Pasricha did one that we can put in the chat. But I
Yeah.
mean, Natasha, what was your take?
I was super excited because we were right on a few, and the rest have some fun updates as well. But right at the top, to take our victory lap, we have that Amanda Robson, formerly of Cowboy, is doing her own fund. It's a early stage venture backing companies across San Francisco and Israel, focused on security, which is great news and exciting. We scooped that fund announcement a few months after our initial story went live. And then Vinay Iyengar launched his own firm as well, which is focused on a very big trend this year, rolling up traditional businesses and applying AI to cut costs. I'll do a shameless plug for the story we wrote about GC and other firms doing this across the board. So we can maybe plug that in the chat as well. On the other end, I think we're seeing some of the people that we highlighted on the list just making, more ambitious checks or, taking a victory lap of their own. So Brex's Art Levy, for example, was one of the operators we had on the list last year. He scored a big win with Bridge getting acquired by Stripe. That was one of the biggest crypto acquisitions in history. And he's, continues to make angel investment checks. And so definitely proves the point of like operators having a good vantage point on the industry. And the only other sort of highlight I would put out there was that Delian from Founders Fund has had his busiest investment quarter ever, deploying 50 million into companies. He also left Miami, which is very noteworthy for those who know, to LA to be closer to startup activity. So we're seeing people rise. We're seeing people become GPs in their own right through starting their own funds. All good stuff there, and I'm excited for next year's update as well because it's fun to track.
Yeah. In terms of attributes, we've talked about some of the sort of commonalities. Is there anything underrated that anybody here and the reporters or Nick have noted that really actually ends up making a successful investor?
I'm happy to go first. I think one thing that felt maybe not underrated, but it doesn't show up, of course, in like markups immediately, but I've found like an area of questioning that's been more fruitful than ever and that's really made the VCs on this list stand out is ability to gain competitive intelligence on a company. Like in the case for James Detweiler from Felicis, he heard about Mercor at like a random machine learning dinner and looked at the third co-founder, not the first two co-founders, but looked at the third co-founder because he feels like they're often overlooked and sent them an email digging into one of their favorite hobbies, or favorite interests, F1, and sent the whole team to Vegas to race cars. And so of course there's like the glam side of that story, but to me it was also like this like scrappy side of like finding a unique way in. And so I mean I would say that's underrated because people right now are definitely in the game of like back-to-back fundraising. And that's all well and known, and you almost know like the top 20 names in a sector at any given time. But I've found people that are sitting on pretty great markups and were early on deals, like had this really unique way of getting in touch with a founder before others, before a big firm swoops in. Somewhat of an evergreen example there, but that's the first thing that came.
You wrote about that in Dealmaker, I think, last Thursday.
Yes, yeah. It's just stood out to me. I mean, yeah, and I think the other examples are like, do they have something outside of VC that makes them better at VC? Like, I feel like in the case of Alexa, at GC, she's a former journalist. I feel like Nick said, the skill sets are similar. It's the same reason we think Lulu makes sense for the list. They're like all about looking at talent and vetting talent. And I think because VC has boomed so much, the more you can like differentiate as not just someone who like knows how to diligence and sort of like make the deal happen, but also like bring something unique. I'm sure as we get into like a more restrictive mindset, founders are going to look to their cap tables for more skills than just the dollars than ever before. So that's another area that I feel like we're paying more attention to.
Yeah, I would say I'll take from the wisdom of one of my other mentors, Ashvin Bhattacharya from my first job at Geodesic, is now at SV Angel. As he was talking to me about how you really be spiky and be memorable as an investor, it's like really, again, three dimensions. One is thoughtfulness. How well prepared do you come to the deal? Are you able to, to your comment about, the third founder knowing they were into F1, right? That level of going deep. There's this great journalist Nardwar in like the underground rap scene, and this guy will go all the way to like the rappers, middle school friends and ask them what they were like there, like that level of depth, right? So that's one, thoughtfulness. Two, I would say it is responsiveness. And so what's your SLA for getting back to a founder? Is it within days? Is it months? I think, this is one where, it's very easy, I'd say, to fall into like the typical VC trap of like, oh, I was busy, I have, big pipeline or whatever. And I think just that next level of care, just handling that process from start to finish, well, reflects on you, right? Having a positive NPS score that way. And lastly, I think is connectedness, right? So, I think again, what really matters to a founder is can you get me intros to talent? So can you get me the right next co-founder or next, technical hire or sales hire, or can you give me leads, right? And so I don't know if these things all seem very obvious, but I think what can be overlooked, as Natasha said here, is like to the level of depth you want to be pointy in any one of these. I think to truly outstanding, right? I think, for me, I would love to go deeper into the thoughtfulness side. I think that's special, there. But others, you can be spiky in one of those dimensions.
Hmm. Natasha, did we see a lot of boomerangs? I remember last year there was a couple, I think both at Kleiner or Natasha or Sheree. Did this happen? And I'm curious if it sounds like Nick, you've had some advice or maybe it wasn't advice to you, but some firms actually push for that. I'm curious how frequent that is and if you've learned anything about that.
Yeah, there was two boomerangs this year. One was at Kleiner, and one was at GC. And so some interesting just sort of leave it. But in Josh's case, he left to do Figma, and in Alexa's case, she left to do, I want to say, business school. So yeah, I don't know. Is there a rule of thumb, Nick, of like people leave and that makes them wanted more at their original firm?
No, one of so one of the strange parts of my journey, I had the chance to basically do MBA internships with like 10 VCs when I was breaking into venture. And so I've seen how funds do things differently, and all of them have their own institutional knowledge, right? I think if you have that, the cheat codes, the spark notes of exactly, hey, how do you get, soft power and hard power to make deals go through? It's a way to accelerate how fast and how effective you can be at that firm. And so I think it makes sense that, you might go somewhere else and you realize, like, my way of doing deals actually aligns better here, or, maybe you're gone and that fund realizes, oh, you could be, that's a missing skill set that we need to bring back into our fold. And, maybe with that new information, that new experience, the 1 + 1 = 3 alchemy.
Yeah, interesting. I'm curious. Well, I will have to track. We have third year. We'll figure out how many we have. I think that about wraps it up. So I wanted to thank everybody who's listened and read, and be sure to share your thoughts with Shri, Natasha, and me over email or in our forum. We will, I think, we won't update the page, but we will at least once before the year is out, kind of check into this cohort and see what's going on with them. So thanks, everyone.